Morning.
Morning, Gav. How are we going this week?
Man, is that market keeping us on our toes?
Certainly is, yeah. The banking sector is interesting, and then obviously you've had some really big moves in healthcare this week. Cochlear was a real shock to the market. I don't think I've seen a blue chip like that fall 40% in a day.
Yeah, it's incredible. I think it sets the tone for some others that are going to be reporting over the next couple of weeks that could certainly see the same sort of thing happen. So yeah, it sets a tone, I think, for the week ahead.
Yeah, definitely, definitely. And I suppose we are about to get into that bank reporting. I think about a week out from that. So yeah, lots of interesting times ahead.
Yeah, I think it's the first 7 days of May. I think all the three banks that report put up their numbers. So I'll just stick a slide
Yeah.
up in the H that shows a couple of things on the banks that's probably worth mentioning. Um, and there it should be coming up there now. So
Yep.
yeah, so I've stuck up the slide of NAB there. They've all got the same sort of pattern. Yeah, a couple of things to watch.
Yeah, definitely. No, so I think NAB reports the 4th of May, so that might be Monday week. So that'll be, I think they're second off the rank. I think ANZ goes first next Friday. Um, it's interesting. NABs has come back from that $45, $46 range. And I was looking at the yields this morning, having a quick chat with a client. I think it's yielding in the low fours NAB. So really, very hard to justify buying it from a yield perspective. I was always taught years gone by that you never buy our banks unless they're yielding you at least 0.5% better than the cash rate. Um, so certainly something in the low fours doesn't really get too exciting, especially in a rising rate environment. Um, because you might as well, for the 0.5%, you're probably better off putting the money in the bank itself, and not having the market risk.
Yeah, I think some things to really be watching there in that lot of reporting. I mean, each of the banks have got their own little nuances. Some of them have got big tech projects. Some of them are, ANZ's tidying up at Suncorp stuff. Some of them are already announced, topping up their bad debt provision. So it'll be interesting to watch what their NIM result actually is and what their net interest margin is and what their guidance might be. And there was a report this morning Morgan Stanley put out about expecting housing prices to drop and interest rates going up. Sort of interesting to see what their guidance is for the next 12 months and how that flows through. So, normally this time of year, I think this time last year, H, we're talking about buy rights in banks, but I think you've really got to wait and see what their results are before you got excited with them.
Yeah, look, definitely agree. I think the results will actually have pretty good core numbers in them for the last 6 months, but it's that provisioning and that guidance which will be super important. It does feel like the market's already expecting, some pretty big lifts in provisions and a little bit negative guidance, as you mentioned. With all of the three that are due to report, the three core ones there, probably all down, between that 5 and 10% over the last sort of 10 to 12 days. Um, Covered calls is something we mentioned last week. I think I had a couple of guys sell some covered calls in CBA, and obviously looking around the other banks. And I've had a few clients talking to me about writing puts under the banks to buy back in, but or to try and pick up the banks on this weakness. But I've sort of been keen to hold off, and I think as you said, Gav, we've got to see these results, and then we can start to look at where we want to position ourselves in the sector.
Yeah, there's another story in the Fin this morning talking about increases in building costs. That's going to flow through as well eventually, new home loans and all that sort of stuff. So yeah, I think this is one you really got to just sit, watch, wait and see what the reports are like, and then if opportunities jump up, well, then you might do it then, depending on how the market reacts to the report.
Yeah, definitely, mate. So I think if anyone was looking to write covered calls, probably missed that chance for the moment. I mean, CBA, you could possibly still look at something there in the sort of mid to high 170s, like 178 to 180 strikes might be worth looking at. But otherwise, I think the banking sector for me is a hold and a watch right now. And yeah, let's see these results.
Yeah, I'd agree. Even after the results, even consider lightening a bit. I had a few clients lightening out of the banks a little bit over the last couple of weeks, and I think that was as you can see by the chart, I think that was a smart move at the time.
Yeah, definitely. Definitely.
Um,
Okay.
I got a trade we did yesterday that might be of interest. I mean, this isn't personal advice; it's general advice. But we, in this sort of environment, if we are going to stagflation, gold traditionally does well over the longer term. So these are the sort of trades you do with the stock that you don't own, but you're very happy to have as part of your portfolio for the longer term.
Yep.
Um, Evolution Mining is one of Australia's quality gold miners. It reported a pretty solid result, really a quality result, I would have said. Its share price has come back a bit, trading around $13. Its average price target of 14.60 there. So you could actually sell the 14.50, which is pretty much the average price target, and get a premium on 75 contracts of a couple of grand there. So yesterday, I had a client do a buy right. We bought 7,500 shares, which is around that $100,000 mark. We then sold the 1451 May calls straight away, and then if you do happen to get exercise on that, you've got 12.5% for the month. And as I said, gold, this sort of stock's one you'd be happy to hold for the longer term. If you didn't get exercise, you'd be looking, and there's good premium in it because of the volatility, so you'd be looking to do it again next month.
Mate, a great looking trade, and I think that's a real that type of trade something we should be looking at across a lot of stocks in the market. With the uncertainty at the moment, option premiums are generally a little bit stronger, so taking advantage of that, trying to pick up that sort of 5 to 10% extra return out of the portfolio over a month or two. Something I think is a great strategy, especially running into May, which is traditionally a bit of a tough month in the US, and also with all the uncertainty around the global marketplace.
Yeah, yep. I think there's a few candidates for this sort of trade if you're patient, and particularly if you're happy to look for quality and happy to hold them for the longer term. So yeah, this one stood out for me yesterday.
Yeah, right. Mate,
Good
one if I
one.
could just mention quickly, Suncorp's had a really great jump today. It's up nearly 9% at the moment, about $1.40. It's coming off a pretty weak base. Look, it's a stock that I've followed for a while. Now that they've got rid of the banking arm, obviously more pure insurance, I do feel it's a pretty well positioned stock. And I think under $18, I'd still see pretty good value there. I think analyst targets are still something into the low 20s. So for the improvement today, pretty good guidance they came out with. I think it's time to look at Suncorp if you haven't already. Hopefully, there's
Yeah,
some more upside to come.
yeah. No, and certainly in this environment, insurance companies holding a bit, you have to hold quite a bit of money in their bank account. So it's certainly one to look at.
Yeah, definitely. Right, mate.
Good one. Well,
Talk next week.
we'll talk again soon. See you later.
Thanks, buddy. See you, mate. Bye.